Will the budget spend more on social sector schemes and announce a string of measures to alleviate the stress of the rural sector caused by back-to-back droughts? Will Arun Jaitley announce a stimulus to boost growth or show fiscal prudence to stick to deficit targets? Will Arun Jaitley raise income tax exemptions for the middle class to boost consumption and demand? Good morning. In over an hour from now, we will see that all-important budget speech presented by Finance Minister Arun Jaitley. We just saw those images of him, of course, reaching Parliament. But what can he do to try and address some of the challenges that India's economy faces right now? Will he spend more on social sector schemes and announce a string of measures which will alleviate the stress of the rural sector, or will he also keep his promise of gradual reduction of corporate tax from 30% to 25%? The other issue, of course, will be to provide some sort of a stimulus to boost growth, or on the other hand also show fiscal prudence to stick to his deficit targets, which is something clearly that both market watchers as well as credit rating agencies expect him to do. Let's pull up the markets quickly to see how the markets are behaving just an hour ahead of that all-important budget speech. Remember, it's going to be a long day there for Arun Jaitley. He has, of course, he went ahead with that customary appointment with President Pranab Mukherjee a short while ago. Markets have extended the losses now, currently trading about 60 points in the red. That's the Sensex for you, 23,090, just holding up above the 23,000 mark. But nervousness setting into the markets ahead of that budget speech. And it's important to track the Nifty right now because we're just going to possibly slip below that 7,000 mark. Nifty is just about holding on to 7,000, 7,003 as we speak, but we seem to have extended the losses just a while ago. We have our special panel of guests with us, Vivek Gupta, PV Bhide. We've got Tom Badikan. We'll also be joined in by the BJP's GVL Narasimha Rao. Vivek, sum it up for us. Of course, Sajid Chinoy also joins us from Mumbai. Sajid, I'll come to you in just a moment. Vivek, if you could sum it up for us, what are some of the things, the big headlines you'll be watching out for when Arun Jaitley reads his speech?
So, as Mr. Bhide said, I think this is a good opportunity for this government. Prime Minister Modi called it one of his biggest exams yesterday. I think it's perhaps one of his easier exams from a timing perspective. And therefore, I would expect this budget to reflect relatively unconstrained thinking. I would expect this budget to focus very heavily on execution. And I would expect this budget to show us the path to simplification and non-tax sources of revenue. These for me would be the three big items from this budget. All of the spending that he has to do, everyone's spoken about it a lot, and I'm sure that he will make all the necessary allocations. But for me, these are the three big things that I would be watching out for.
Sure, let's go straight across to Sajid Chinoy, one of the finest economists in the country. Sajid, I know you've read the economic survey word by word, and you're someone who can possibly tell us if you've got any sense from the economic survey as to what the focus of the government will be as far as the budget is concerned. The weight of expectations is tremendous, but you think there are certain sectors that are likely to get tremendous thrust and boost?
Shweta, I'll just make the point that I think we have to recognize and be realistic here that there are very few degrees of freedom for the finance minister. On the one hand, he's got to stick to a fiscal consolidation part to make sure bond markets don't get very uneasy. On the other hand, he already has these sort of obligations, higher public investment, a pay commission to adhere to, funds for bank recapitalization, spending to the rural economy given the agrarian distress. So I think the larger point is going to be how do you achieve growth-friendly fiscal consolidation? That for me is the biggest challenge over here. And you can achieve that in two ways. One is, as somebody earlier said, you want to achieve some fiscal consolidation through asset sales. So for me, the big theme is going to be, will the government become bold in selling assets on disinvestment, on SUTI, on spectrum? And the second is, will you get that big public investment thrust where the multipliers in the economy are the most? I think if you read the economic survey carefully, that's the big message there, that public investment has to be the driver of growth in this economy. And therefore, I would expect a lot of focus both on public investment, rural and urban, and secondly on the banks, because The survey went on repeatedly on the twin balance sheet problem. And so it's not just the additional funds for recapitalization, it's all the governance reforms that the government has promised to focus on. So for me, those are the larger messages today. Can you achieve growth-friendly consolidation? Will there be a renewed space for public investment trust? And what is the package of reforms, both financial and non-financial, for the banking sector, which is in deep distress at the moment?
Growth-friendly fiscal consolidation. I like that term, Sajid, but isn't it almost impossible to achieve that? Because the minute you're also providing a stimulus, kick-starting growth with a stimulus, you're also, there are worries about slipping on that fiscal consolidation path. There are worries about whether you can stick to fiscal consolidation. You've in many ways summed up some of the challenges in terms of pay commission payouts as well as bank recapitalization, some of the issues that he faces. Sajid, if the budget is not bold, like you've talked about strategic sales, if the budget does not talk about alternate revenue sources, then in many ways would you say it would be a disappointment, or would you also say that the big commitment of sticking to fiscal roadmap will be questionable? It will not be a credible budget if we don't see any big bold moves on how he intends to raise revenues, because let's face it, it is a slowing economy and we're not going to get the revenues from the traditional sources like we expect.
Right. You know, I think we need to cut the finance minister some slack today. I've never seen a budget in recent years with so many trade-offs. He has a rural economy he cannot ignore. He's got a pay commission he cannot ignore. He's got a banking sector he cannot ignore. And he's got to keep pushing in public investment, right? And there are limited degrees to how much you can raise revenue by raising taxes, given the state of the economy. So I think let's be realistic about what he can achieve. As regards the growth-friendly fiscal consolidation, it may sound like an oxymoron on the face of it, but there are at least two ways you can achieve this. To the extent that much of the consolidation this year and next year is done through selling assets, that will not hurt growth. It's not like cutting expenditure or raising taxes. So the more credible asset sale plan you have in the next 2 years, the more growth-friendly will be this consolidation. And the last point I'll make is you've seen in the last year where the government deserves enormous credit is capital expenditure. They set a very high bar and they have exceeded that bar. So to the extent that you can get more allocation for roads, highways, electrification, irrigation, the multipliers on growth from that spending down over the next year or two will be huge. So those are the two ways you can get fiscal consolidation to keep markets happy, and yet it will not be as inimical to growth to disappoint equity markets.
All right, we really do hope that he can do all of what Sajid Chinoy is telling us. Sajid, stay with us. Let me go straight across to get a bit of a political perspective. GVL Narasimha Rao joins us from the BJP, and of course we've got Tom Vadakan here with us to give us a sense of what the opposition is thinking. Mr. Narasimha Rao, to you first. You just heard what Sajid Chinoy of JP Morgan was saying. This clearly is one budget which is one of the most challenging budgets that any finance minister has presented, just because of the number of trade-offs you have. Focus on bank recapitalization, go ahead with the pay commission payout, focus on the rural sector, increase spending on social sector schemes. So long list of expenses, and when it comes to revenues, it's almost hard to find how you're going to increase that, the other side of, which is the revenue side, to make up for all these higher expenses. Can we in many ways say this budget has to be big and bold and brave? Will we come out after the speech and say this is one of the boldest and biggest budgets that we presented, or are we already setting ourselves up for disappointment by putting those kind of adjectives for the budget?
Shweta, I think this budget is not being made to make headlines. I think this is not a headline-hitting budget. I think we have a particular economic situation. The country, we have performed very creditably despite the global meltdown, sluggish growth internationally. We are also, the forecast for the next short and medium term also is quite good. To generate rural demand, the public investment has to go up. A lot of these prescriptions have already been put in place in the last year's budget itself. The huge investment, public investment in infrastructure is not something that has not happened. In the last 12 months, we have seen a big investment into highways, a big investment into railways, which have really not attracted attention for many years in the UPA era. And also the big expenditure on Narega, something that puts money into the pockets of the people directly. Certainly, I think this is a sort of a prescription that hopefully that will continue. How to generate rural demand, how to ensure that a rural economy, the agrarian economy also picks up, are certainly the concerns. This Prime Minister Shri Modi, believes in equity, believes in better targeting of subsidies, believes in ensuring that the farmers have stable incomes. We have just announced, Prime Minister had unveiled a crop insurance scheme, which has several firsts to its credit. So certainly, and also Mudra scheme, where more than 1 lakh crore advances have been given to self-employed sector. In the unorganized sector.
All right, I'm going to get Tom Vadakan also to respond to some of the points you've made, but those are images that again we're getting of the cabinet meeting that is going to start there to go ahead with that budget document. Those are important images that are coming to you of all the big politicians clearly making their way into parliament on that big budget day. But let me go also straight across to Naina Lal Kidwai, who joins us to give a perspective. She is clearly one of the best financial minds in the country. Past President FICCI, Naina Lal Kidwai, we've all seen budgets, we've tracked them, we've covered them, but many of the experts here are saying this is perhaps one of the most challenging budgets that any finance minister has presented. Would you agree with that, Naina, and would you also come out with your own prescription of what you think Arun Jaitley should do today?
I very much agree with the fact that it is a challenging budget, because we all want to see kick-starting of investment, we want to see demand generation go up, and all this happening at a time where there is a commitment to a fiscal consolidation, which is where the challenge comes. I would personally like to see a little more leeway given to the finance minister to not have to stick with committed fiscal rates. This is always a bit controversial, but I think what we really do need is investment. The government's done well with investment through the last year. We need to see private sector investment return. We need to see more investments in airports, ports, connectivity for these airports and ports, roads, power coming back. So a huge amount still required there. And then the whole area of consumption demand being stepped up. This would require lowering of taxes, increasing exemption rates, bringing back a feel-good feeling so people spend. And in order to do that, we need money and we need revenues. And this is not easy in the current environment. I really would like to see rural demand return as well.
Surely returning of rural demand, making sure that he can boost that rural space is absolutely critical. It is something that most believe will be the key focus area. But I'm going to take forward one point that Naina Lal Kidwai has raised about giving the finance minister a little bit of leeway to slip a bit on that fiscal roadmap. I'm going to get, of course, Sajid Chinoy, Vivek Gupta, PV Bhire and our political guests to react to that and to debate whether that's a good idea or not after a quick break. Stay with us. Welcome back. Should Arun Jaitley get a bit of leeway to slip on the fiscal roadmap and go ahead and provide that much needed stimulus to the economy at a time when there are a number of challenges? Private investment is sluggish, rural demand is extremely weak, and of course there are important payouts to be made, including of course pay commission as well as bank recapitalization. Those images on your screen of important political leaders making their way into parliament on D-Day, which Prime Minister Modi has called his exam, his big test. Let's go back to our panel of guests: Naina Lal Kidwai, Sajid Chinoy, Vivek Gupta, PV Bhire, GV Narasimha Rao and Tom Vadakan, all with us. Let me toss across the point that Naina had made, which was, of course, that allow that little bit of leeway to Arun Jaitley to go ahead and address some of those challenges. And if you're going to keep a close eye on that one number that everybody watches out for, at least the market watchers, the credit rating agencies, are you slipping on your fiscal deficit target? Are you going to stick to that roadmap? Or you're not? Terrible. Sajid, do you think it is as crucial this year as it is? Because we've also had some arguing that if you can't stick to your target in a year like this, then when will you?
Very good. In this country for the last 3 months. I can understand those who are saying growth is weak, there are all these obligations, what's this obsession with fiscal deficits. I'll simply make the point that those of us who are arguing for sticking to the roadmap are not doing so for ideological reasons. You just look at the hard-nosed reality of bond markets. At a time when growth in India has been quite weak and momentum has been falling, you should have expected bond yields to be softening. Instead, over the last 3 months, you've seen this unrelenting hardening of bond yields, suggesting that the capacity to absorb any more government paper, central and state, is becoming less and less at the margin. And all this does is keep borrowing costs high for the private sector. And we've spoken about the significant leverage in the private sector and the balance sheet problem there. So this doesn't help alleviate the balance sheet problem if borrowing costs will be high. And that's the main reason I think some people are arguing to stick to the deficit path, which is that is the best way to keep borrowing costs down. The big story next year is going to be on state finances, because they'll have pay commissions, they have to pay this interest on Uday bonds. So given that state finances will expand, it's important that the center keep its fiscal contract and bring it down to 3.5. The last point I'll make is, Shweta, is the one we made earlier. There is a way to have your cake and eat it too. There is a way to bring this down to 3.5 today and keep allocations for investment high. That is by selling assets. That's by selling Suti. That's by selling Spectrum. That's by being bolder on disinvestment.
Become bolder on disinvestment, have your cake and eat it too. Will Finance Minister do that? Naina, respond to that, because, it's important that you're getting this perspective from an economist who's also putting out a point that, why is it that you need to deviate from your deficit path? The other point that a number of other economists have been saying, you know what, you've got oil prices at record lows right now. You've got an economy that's clearly, on paper at least, expanding at 7.6%. And if an economy like that is seen to be deviating from its deficit path, it would definitely send out a very negative signal to foreign investors, to credit rating agencies. Naina Lal Kidwai, would you agree with that point?
So I think at the end of the day, the point that is valid is what is the quality of the fiscal deficit. We have seen disinvestment targets set and breached in the past. And in a market which is soft and not looking great, we will clearly have issues in terms of meeting tough disinvestment targets. Yes, sale of spectrum, sale of government assets, all of that are certainly ways for revenue generation. But looking at the quality of fisc rather than just the number is going to be important. And I'm really nervous that in adhering to the 3.5, we put in all these plug numbers which we then can't achieve, namely disinvestment. We also know that the demands from the banks are going to be higher than what was provided for. 70,000 crores is what was provided for, where against a demand of 1.8 lakh crore. So we are expecting 1.1 lakh crore to come from the banks themselves at a time when their performance is weak and their share prices are down. So the focus should be on getting the stock market robust and up. This comes with growth. This comes with better corporate results, which need to get some buoyancy in there. And then disinvestment follows at prices which are far more palatable. To try and disinvest when we have mining assets and a lot of the commodities which are owned by government down at the levels they are, share prices are down, public sector banks prices are down, disinvestment becomes that much harder. So I think it's really a bit of chicken and egg, and I would argue that if we give the leeway today, get stock markets up, get investment going, get the growth back on track, we have a much better environment to do some of the things which have been suggested, namely disinvestment and so on.
Well, I think
looking at the banks is going to be very key.
Absolutely, and that's a very important point you made about not just making a commitment to stick to the deficit path, but also making it a credible one, also something that people tend to trust and believe, and not just go with a number because you want to stick to it. I'm going to request all my panel of guests to just stay on for a bit. We're going to slip into a quick break, but back with plenty more.